welcome to Billionaire. We will do Nifty's analysis for next week. So past week Nifty spent in consolidation. So last 5 candles you can see the Nifty moved barely in 200 or 300 points range. So this consolidation is not good for option buyers. They will lose money in such consolidation, and option sellers will gain money in this consolidation. So we'll do the Nifty's analysis with price action indicators first, then we'll check Elliott Wave, and at the end we'll check the option chain. So before we do that, let's check previous week's analysis, what we discussed. In previous week, we discussed that Nifty's wave counts are not clear, so it will be difficult to forecast the next move. That's what we discussed. We also mentioned if Nifty breaks 17,972, it can head towards 18,000, face resistance, and it can start B move, which will be a consolidation. Then C will head towards 18,300. So this is the chart that we discussed. Okay, so this was the chart. This was the basis of our analysis. So we were saying if Nifty breaks this, okay, 17,972, then A will finish here, then we'll have a consolidation B wave, and then we'll see go towards 18,300. That's what we said. Second possibility was Nifty opening gap down and continuing dip downside. So we were expecting it to break 17,584 and then go downside, making one more low, and this could be a leading diagonal pattern. So both cases didn't happen since Nifty traded within these range, within the range that we given in the last video. So neither 17,584 was broken nor 17,972 broken. So Nifty stayed within these 2 points that we given. Okay, so pretty much clear from the consolidation here that Nifty did not move as per our analysis. So let's start with price action indicators. Here we are using 48 EMA as a yellow line, 13 EMA as a blue line. This white line, which is barely visible, is 100 EMA. So Nifty is facing resistance near this, and this pink line is 200 EMA. So Nifty is trading and consolidating near to 100 EMA, 13 EMA, and it is about to touch 48 EMA. Okay, upside it should touch 48 EMA. It might break it, but fail to break and then could drop on the downside, or it can, as it has formed a hanging man pattern. So this pattern is called hanging man. Then there is an inside bar pattern. So if the high and low of this inside bar gets broken in that direction, the market should move. If low gets broken, we should drop towards 200 EMA, which is somewhere around 15,580 levels. If high is broken, very small upside could be possible up to 18,000, or after, if it grows sharply above 18,030, then we can expect it to head towards this resistance of 18,300 to 200 levels. Here you can see that RSI is below 48. It is still trading in a bearish zone, and now for our surprise, Aron has turned sideways, or could say it is coming near the crossing line level. If it crosses this, then temporarily we can have a bullish move on the upside, or it can go to the sideways like this. It can go sideways like this, and it might turn again bearish like this. Okay, this is the way the Aron can move. This is the forecast of Aron, but yeah, that's something I'm forecasting which may go wrong as well. So we have to observe how Aron behaves in next couple of days and how the moves happen. As of now, we are still in consolidation, and the break of this hanging man high and low will confirm the next trend. This is what I believe as per the price action and indicators. So now let's move to the Elliott Wave. This is our Elliott Wave chart. Since December, we are discussing this chart, that we are in wave 2 heading towards 16,700. This could be expanded a flat correction, and then we can have third, fourth, and fifth wave heading higher. Wave 2 could have finished here. There is a negative divergence here between price and MACD that indicates it may not break this high anytime soon, and this case assumes it should correct towards 16,700 to 500 levels. Then the wave 2 could complete, and then we should head higher. This is the same chart which is explained in little bit more detail with Elliott wave counts. So this is the second case that we discussed, that this could be a leading diagonal structure with wave 1 finished here, 2, 3, 4 and 5. The fourth wave already went below 0.61 Fibonacci. So Nifty after budget day has made a low of 17,353. So it has went almost 200 points below 0.61 Fibonacci. So I'm considering that this case is over, but I'll still keep it because of, you could say, some reasons. I would keep it for now, but pretty much the chances of this case is over, and there may not be a leading diagonal case, and this could be some bearish pattern, at least of wave 2 going on the downside. So after this, we did a lot of analysis. In each week we discussed these charts, and in last week we discussed this is how it would move. Okay, so this case looks possible, but the possibility of this case is more or less over, because Nifty has already so this is the last swing, right? 17,972. From the low of 17,353, Nifty has recovered 90%. So I doubt now it will make this pattern of a leading diagonal. Okay, this may not be possible, and this chart is also can be deleted. So this is not required. I'll delete this chart. Okay, so for next week, two cases. One is bullish, one is bearish. As always, we'll discuss the bullish case and bearish case both, because there is a possibility in consolidation it can break either side. So as I said, with price action as well, same thing here. We need to mark the low of that hanging man candle and high of that hanging man candle. So high of that hanging man candle is 17,917. So if it breaks that high, so 17,917, if it breaks this or breaks the low, okay, then there is a chance to give the next move. So bullish case is assuming here that Nifty will break 17,916 or 17. If it breaks this, it can be in a C wave of Y wave correction heading towards minimum 18,170. So when you plot Fibonacci on these 3 points, you get this number. Okay, so this is the minimum expected level it can go. It can even head towards these numbers as well, 18,500 to 350 levels. It can even go higher as well if it's largely bullish. You can see here 0.618 Fibonacci of the entire drop coming at 18,300. So as I said, we are assuming this case where wave 1, 2, 3, 4 and 5 completed here. This we are assuming wave 1 and this as wave 2. Currently we are in pullback A, B and C. So currently it's not clear whether the A wave finished or not and whether the B wave has started or not, or it's a complex correction. That's what is confusion. So when you plot Fibonacci, you are here on these 2 points, you get 0.61 Fibonacci as 18,300. So most likely it will head towards this number. Let's see in next couple of sessions where the break happens. So the bullish case that I shown you, it's obviously 18,000 break will trigger a short covering rally towards 18,200. So this is obvious. There are two problems here. The price is coming out of the channel. Okay, so the price has started trading out of the channel. There is a small gap left here. On the both side there is a gap. So here you have a gap and here you have a gap. So this is a bearish gap and this is a bullish gap. So both side we have one gap. So here also we don't have a clarity which one will take more effect. So for bearish case to trigger, we need to wait for 17,780 break again. So let's discuss the bearish case. So this is the bearish case. Let me try to zoom in. Okay, so yeah, it's not zooming in. So what I'm assuming in a bearish case is A wave is yet to finish. Okay, A wave could have finished here near 17,916, and this looks to be A wave. B as an expanded flat correction. Okay, there is a homework for you. Let me know what other pattern you see here. I don't see anything other than expanded flat here. Try naming 1 2 1 2. You will be stuck and you will not be able to understand what it is. But what I concluded is this is some expanded triangle. Okay, so this is what it shows. as of now. So A, B, C, wave 1, 1, 2, 3. Okay, sorry, A, B, C, wave 2, A, B, and C, wave 2 again. Sorry, wave 3, wave 4, 5, again 3 wave moves, 5th wave, and now A wave completed here, and it is a leading diagonal structure with three waves, and now we will have ABC pullback heading towards 17,568. So here again, break of 17,780 will give us the confirmation. We have to wait for the confirmation, and we shouldn't jump right away. Then again, what happens after this? B wave. Okay, if we come here, there is again chance of going to give a pullback. So we are in a pullback from this point onwards. This low may not be broken anytime soon. So right now we are in a pullback, and I'm expecting it to even head higher once it completes the pullback. So in next week itself, it should complete this pullback if it breaks 17,780. So watch out, these two levels. Will also add those things in a summary as well. So now the last part, discussing about the option chain. So option chain has a tight range for this expiry. Here, as always, what we say is on put side, maximum number of sellers present at 17,800. So this acts as a support. So this is the support line for us as per the option chain, 17,800 and 18,000. Which has a highest number of call writers, which will act as a resistance. So highest number of call writers are present here, or call sellers are present here. So this will act as a resistance. So we just have 200 points of range. So now how we have to look at it, just remember, whenever it breaks 17,800, it will shift lower. So here we do not have a clear count, clear numbers, as all these have same number. So we don't know where it will head. Okay, so as per the technicals, we can consider that it can head towards 17,550. So if 17,800 is broken, so that's why we also have a hanging man low near 17,780. 17,780 break means 17,800 break, right? So this means we will shift lower towards 17,600, 500 levels. Okay, break of this is important. Now again on the upside, 18,000 break will trigger the upside rally. Okay, on the opposite side, that's what we are discussing. It needs to break 18,000, sustain above it, then it can go upside towards these numbers. Okay, here also we don't have a clear picture where it will head, but yeah, minimum 18,200 it should head, because this is the second bigger number after 18,000's call open interest. So it should head towards 18,200 here. On this side, we have 17,500 as the second biggest number. So this is how you can deduce the second range for the Nifty. The initial range is 17,800 to 18,000, and second range is 17,500 to 18,200. So that's all on the option chain. Do watch, like here, if price breaks below this, these sellers will exit and will shift to the lower strikes, trying to reduce their losses, and this will trigger the fresh shorts in the Nifty. And here, if it crosses 18,000, the call sellers will try to shift higher. That's what will trigger the short covering rally. So this is how we should read the option chain. Hope you understand it clearly. I'll take a pause here. I'll add the summary for entire video. That's what we discussed. So main two areas that you need to watch out is 17,900 break, and on the upside, on the downside, it should break 17,780 level. So that's all, folks. Hope you understand the analysis. Do hit the like and subscribe. Add comments if you need. If you have any doubts, add the comments, and we'll be happy to help you. Enjoy the weekend. Thanks a lot. Bye-bye.